Yo.
Yes, Chris. How you doing? You still in Spain, yeah?
How are you? You okay?
No, I'm good. Enjoying the weather here. It's like 31 in London. How about yourself? How's it like in Spain?
Oh, it's lovely. Yeah, it's been. I don't want to say too hot because I can't complain, but it has been. You normally get a little bit of a relief from the sunshine, but it's been very, very warm, like the whole time.
Yeah.
We've got another week left, which is lovely, and long may it continue, really. So just loving life. 2 weeks nearly up though. Be home in 5 days on Friday.
Nah, that's a nice little break. I can see the tan in your face as well.
Yeah, that's it. I was literally just come from the pool as well. I come from the pool. I thought I'd dry off quickly and then I'll come up and have a little chat with you.
Amazing. Fantastic. How's everyone else doing in the chat? Where's everyone from, man? Who's in the building today? I know we've got 30 viewers so far. So come and say hi. Pretty sure Lawrence is there. He's a regular.
We want a guest session today as well, don't we? We want people interacting as much as possible and having a chat with us.
Oh yeah. That was the plan. Yeah, so we can send over a link, and then you guys can jump on the podcast.
Yeah.
Amazing.
Or just or fire questions at us. 5 questions at us. Fire charts at us. Lawrence is here, obviously. Fire questions at us, fire pairs at us. We can do some analysis for you. Before we do anything, though, what we're going to try and do, we're going to try and find some trades that we can kind of look at live. Now, obviously, we've only got an hour that we can get these trading windows in for us. So it makes it difficult to try and find some live trading. But I think we can hopefully find an opportunity. I've got one on the charts literally right now that I'm looking at. And I'm going to be honest, these might not be the absolute best trades we'll ever see because I'm trying to find a trade for you guys, but hopefully it should give you a bit of a thought process behind trading. Then we can kind of watch it throughout the webinar and maybe then revisit it at the end of the session. So I'm just going to jump on my charts quickly if that's okay.
Cool. Amazing. In the meantime, I'll see if I can look for a trade as well. Not that I'm going to take it, but I'll just walk you through it. Why not?
That one, right, share that one. Right, everyone see my chart?
Yep, it's loading. There we go. Yeah.
Okay. So look, this is where I am on Euro USD right now. So we're in a bullish range. Now, ideally, what I want to see, what would be classed for me as an A-grade setup, is I want to see one of these daily levels. So my range here is bullish right now. Okay, I'm in this range here. And I'm a range-based trader, so I'm looking at playing the ranges and continuing to play the ranges kind of up and down, and that's kind of how I like to work. When I look at my slightly higher time frame, whilst I'm in a bearish range, we're in a bullish pullback at the moment. So this bullish pullback, although it's counter trend, I've got the 15-minute time frame on my side. So for me, until I get a 15-minute change of momentum, i.e., the market moves like this, ultimately I am a bullish trader because I day trade. I'm looking at very low time frame entries and things like that. So where I am with this right now, what I'm looking for is, we can see that throughout the morning we've been creating higher high, higher low, higher high, higher low, and very recently we've just created this new structure here. So once again, we're in a bullish range within a higher time frame bullish range. So I've got my 15-minute range there, and then I've got my kind of 3-minute range here. So I'm lined up in my time frames right now. So effectively, this is a short play position, and hopefully we should get most of the move. It may also obviously run these lows as well. The reason why I quite like this, and I was worried if we're going to try and do some live sessions that these might be kind of forced trades effectively. But the reason why I actually quite like this is the DXY, which is obviously the dollar, raw dollar, the DXY is taking out liquidity on the buy side. We are just about to reach the external liquidity of its own 15-minute range as well. So if we can get a sweep on that external liquidity, what I'm looking for now is I'm looking for a sweep of this external liquidity, and we've had this little pullback. I'm not too concerned about that because New York has literally just opened. So we've kind of rejected this little sweep of liquidity here, which was this sweep of liquidity, which was off the basis of this sweep of liquidity. So we've got multiple liquidities on the buy side being swept, and we are now approaching this kind of external level, which you can see I've got an alert set on it. We're approaching this external level, which would be a key level for me to get swept. So all I'm basically looking for now, and it looks like I might have missed my optimal entry, but hopefully waiting for a pullback, I'm going to set a limit order on this. What I'm looking for now is I'm looking for one of two things to happen. A pullback into here, okay, because we've had this initial pull up, we've had this initial push up. If I can get a sweep at this low, then I'm more than happy then to take a trade off the back of this. We've got a nice entry here, gives me 2.25 out to that external liquidity. I can set my break even quite early because it is a Monday. I'd be pretty happy with that. That's option number one. And I'm actually going to set a trade on that right now. So when you set a trade, new order, and I'm going to go for a 50% position, set a limit order. So we're going to do a buy limit. The buy entry is 9199. I'll always round them up, so I'll do 92. My stop loss, I always round down a little bit. So my stop loss will be 0.9200. My stop loss, I always go down a little bit. So my stop loss is going to be 9140. And 0902, and then and that is now placed. So I've got my order set. I don't know if you can see that on the camera, but my order is now set. It's ready to go. So that's kind of my main order that I want to be taking effectively now. The alternative to this, which might not give me the best kind of entry, there's kind of two other alternatives. One is it just keeps moving up from here, which I think is probably unlikely. My second alternative is that we create structure, sweeping out this level here, and then we can get in on a pullback. So we've got a couple of ways to get into the marketplace. Hopefully we come back down and just sweep this little area here. A little tag into that area will get me into my trade. I've got the XY kind of lining up with that as well. So let's see how this plays out. We'll monitor that throughout the session. We'll jump back on that maybe a little bit later. For those of you who are watching, obviously at home as well, if you have a look at your USD chart, you'll be able to see the way my analysis is playing out, and we'll go from there. And look, let's just see where we end up. So Euro USD long, entering about 0.92, so 1.092. And then focusing on that daily extreme level, which would be 9.314. I'll take my profit target just a little bit below that, kind of 9.310 on a round number. If we can get into that rate, and that'll be a nice little win for the week, nice little 2R for the week, got 1% in the bank, and start the week off right. So let's see what we get, eh?
Yeah, it was pretty decent actually. Yeah. Nice little trade.
So we go. Joseph, welcome, dude. How you doing? Good to see you guys. Vida's been in the chat from like 8:28 a.m. Is Vida here? Has he been watching since that early? I'm really sorry.
No, I think he commented.
He commented.
Yeah. Well, if he's been waiting, then yeah, he deserves a medal for that commitment.
I don't know if you can see that. That's the. I don't know if you saw it earlier. That's limit order. We're set now. So one position there, ready to go.
So you got a buy limit at the double.
Yeah, buy limit on there, and just see how it plays out. How's your week last week, Diego?
Trading wise, I haven't really traded.
No.
I haven't really traded. I'm
you got time off?
Well, yeah, time off. Just about my headspace not in the right. I'm not in the right headspace, so I'm gonna give it a few weeks until I'm back into my zone. I even got to the point where I got this book to help me with my current situation. Okay, what's it called? Clarity. Oh wow, really good book. Yeah, Clear Mind, Better Performance, Bigger Results, by Jeremy Smart. My cousin Rodrigo recommended it. Yeah, he's a psychology coach. So, you know what? That's exactly what I need right now. Yeah. So once I finish the book and do whatever I need to do, then I'll get back into it. Yeah. Nice. So right now, I'm dangerous game in my stock trade. I'm just not in the right space. But the thing you need to know when not to trade. When not to trade. That's it. If you're trading for money and you're not in the right headspace, then good luck everyone, because that's not going to pay out well. But I'm still trying to keep sharp. Mm-hmm. So I'm still looking at market. I like to forecast because it's just I'm addicted to it and I'm passionate about it, and I just like doing it. Right? Yeah. There are a lot of trades I would have taken, would have played out, but who cares? Yeah, definitely. It's about being sharp. I don't want to take a full 2, 3, 4 week break
Yeah.
and then come completely fresh, which it works, but I'd rather still be in the momentum. You know, it's like if you're an athlete and you play a professional Premier League match or whatever once a week. Fine, you can take a break if you're overwhelmed, but you're still gonna do some workouts. You're still gonna follow your diet plan. You just sort of don't have to perform in the live market. That's
no, exactly.
That's it really. But in terms of trading, like I can't see any trades. I'm not looking for trades, like I said. But
did you have any trades last week that kind of played out? Did you kind of go through the week last week and see anything that you would have taken?
Yeah. I got a couple of trades. But this is the thing. A lot of the trades that I forecast, they play out.
Yeah.
A lot of the times, but when it comes to the live market, it just sometimes it doesn't fit the rules or whatever.
Yeah.
It is what it is. But yeah, there's some trades that played out. I'll see if I can spot some. I'll briefly share my screen. I'll cover DXY real quick, and I'll see if I can find some examples of the trades that I've just keeping a track on. And then after we can get into today's topic, which is how not to ruin a prop firm,
how not
to blow an account with a prop firm. Hold on, where we are? Let me share my screen. Has anyone got any questions so far? Before we get into the topic of how not to get banned from a prop firm. So I know some of you guys might get banned from prop firms, and we've got some conversational topics that we can cover real quick. In the meantime, I shall share my your trade's gonna be good. Come to think about
very good. It's tagged my entry 0.0.
That's a good trade. It's a good trade. It's in confidence with my analysis.
Just been tagged, but we haven't actually entered it, and I don't know whether to manually enter now or whether just to let's see. The XY hasn't yet hit its liquidity point anyway, so I still feel like we might have a bit of a pullback. Got divergence on GU as well, so GU is making higher highs, higher lows at the moment as well, which is always a good sign. It shows that there's strength going into the marketplace. We're getting some movement now. We might have missed that entry annoyingly. It's literally just
it's a good trade. It's an amazing trade. It's in confidence with my
It's tagged it perfectly, and then it's just bounced off. So whether we get a pullback or not, I'm not sure yet. We'll see.
Yeah. Makes sense. I'll share my screen quick. This is my DXY. Hold on. We're yet to complete this sort of mini fractional Elliott Wave 5 entry for a potential pullback.
Yeah.
It could be a pullback. Bigger picture, there's a lot of room to climb. But right now on the M15, I am expecting a bit of a pullback towards this imbalance fair value gap, which obviously coincides with your M1 dollar weakness. Right, and you're looking for a quick in and out. Was it around 2R, 1.5R to something?
2R, about that.
Perfect. I mean, and it's do a pullback on my chart on the DXY. You can see it's grabbed liquidity on the M5. So I think that's a really, really good trade to be fair, short term. Then obviously, personally, I'll probably it's a good trade. I'll like to look for a long as well, take out this major liquidity, but that might be later during the day.
Mm-hmm.
So there's definitely a pullback coming. That looks all right. Let me look at my Euro USD, see if I can find the trade. I'll be quick. So dollar, what I like to do is I like to flip the screen and then more or less replicate what's happened on the DXY. Hold on. Looks like there's major liquidity on the Euro hasn't really been liquidated, which is interesting. There we go. So that's the setup right there. Simple.
I was going to say your chart looked upside down then.
Yeah.
Do you do that to compare against the DXY?
Only when I'm looking at the Euro, It just saves me time rather than I'm trying to look for the right, just saves me a lot of time. So there we go. So it looks like the Euro is basically, it's do a pullback to go along, and you've got like you missed an M1 entry, but hold on. In terms of Elliott waves, we've got 1, 2, 3, 4, 5. Looks like it's yet to complete 4. So based off from what I can see, I believe there's a good long now, but it's a pullback long. A pullback long, probably to some liquidity here, and then complete 4. You see, there's so many opportunities, man. So much opportunity. But the long that you've got, it is bang on for a pullback trade for me. Bang on, look at that. That was a fantastic
We've just broken M1 structure now. I'm very upset. I'm not actually
bang on trade.
It looks like we might have missed the entry. See if we get a pullback.
And you can just come out here.
If we can get a bit of a pullback from here, then we're laughing really. And I can get in maybe with an even tighter entry, but it looks like it's doing what it does.
Yeah.
Tag the entry, and maybe should have just manually entered when we were down there at the bottom, but let's see what happens really. Let's see what happens.
Yeah, you probably would have manually entered if you were in the zone, not doing a live stream. But, because you committed to the buy limit, you committed.
Yeah, that's it.
But this is why I don't like trading when it's live. But amazing. This is the thing, look, Chris missed it. He got very unlucky. Got a banging trade. Just following his rules. Yeah, banging trade. Unfortunate, but banging. So yeah, that's it really. I mean, that's it for me. So trades that I've missed. Hold on, because I'm not trading. Where are they now? I think NZD CAD was bad. Yeah, this one here. That was one that I missed. This is just a simple sort of engineered equal highs Elliott wave 4 entry. 1, 2, 3, 4, 5. And what I saw at the time was this. And I was expecting it to engineer some equal highs, and it did, but I never took it. Don't really mind. It is what it is. What else was there? Euro pound. This was a mistrade. I wanted to enter up here. Didn't really go there. But I think Euro pound is going to be a really good trade for a short. Potentially, if it can come up here and drop, depending on price action, it might eventually go to my point of interest that I'm anticipating. So that's Euro pound, and there was another one. Hold on, it was this one here. Nice little boomerang. There's the CAD. I'll spend too much time if I cover those trades. There's no point. Let's go over today's topic then. Otherwise, I'll be here too long. Oh, dollar yen. Yes, dollar yen was another one. Yeah, that was a good one. Fair enough. That's it, really. That's it for me. I don't want to cover it in too much detail because we won't have enough time as usual.
Yeah, fair.
So, yeah.
Euro USD has just absolutely flown off. It's gone.
Of course it did.
It's gone. We're at break even already.
Yeah, I was gonna just keep banging. That's a little trade there. Oh, what's this? Oh, okay. So DXY is at a point of interest, and you would have probably come out and you'll take profit. Really? So, yeah. I'll be looking for a long now around here. Sorry, a dollar strength.
Yeah.
From around this zone or below here. But you would have taken profit. That was a fantastic trade. Good one, Chris.
Yeah, nice little catch that was. Nice little catch. So we're not in it. Literally tagged the order as well. Came right down to the order and shut off.
Happens too often for me as well.
Always the way. Yeah, topic of conversation today. So we're going to go through kind of how not to get banned by prop firms effectively. So we've got a couple of different areas we want to kind of go over. And then maybe towards the end of the session, we'll see how Euro USD is getting on. And we'll go through some trade recaps that I took last week as well. But let's get stuck into this topic then. So just off the top of your head then, Diego, for you, how do you not get banned by legitimate prop firms?
The first thing is read the rules.
Yeah.
Sorry, but I'm old school. Read the rules, guys, and just obviously follow risk management and treat it like you're trading your personal trading account.
Yeah.
Right. But obviously, yeah, treat it like a personal, as in don't start gambling or over trading. Follow the risk management, and if you're trading 1% on your personal account, then do 1% on a prop firm challenge.
Yeah.
Right. If you're trading 0.5, do 0.5 on a prop firm. So it's basically just treat it like your trading account, your personal trading account, and follow the rules that they ask. Just follow the rules. Yeah. It's as simple as that, to be fair.
I think this is where your data is really important as well. It's really important to have your journal and to really understand your system, because you need to know, for example, things like what's your biggest losing streak and what's your average losing streak. So you need to know over the time you've been trading what your biggest losing streak is. That might be like 8 trades in a row, for example. And therefore, if your worst losing streak on the strategy that you're trading is 8 losses in a row, and you're trading more than 1 to 1R, then you should be able to factor that in then to trades that you've taken. Ultimately, you should be able to then look at things like that and go, well, do you know what? If I can take 8 losses in a row, and my daily loss limit is 5%, I'm doing that over 2 or 3 days. I know that I can trade, let's say, 1% per trade relatively safely. Again, though, with that, then you might want to be a little bit more conservative, because you've got the psychological battles, you've got the pressure, you've got the want to pass, which is going to attack you a little bit as well. So maybe you go for like 0.5, which is what I do. I go for 0.5. I know I'm never going to hit my daily loss limit. I would never trade 0.5. I would never take 10 losing trades in a day, for example. But you might want to be a little bit more conservative, because remember, there's a reason why there's no time limits on these things anymore. Just take your time with them. I think what you said, Diego, is absolutely perfect. Treat it like you would do a personal account, or maybe even treat it like a personal account, but even safer than you would do a personal account, because of things like daily loss limits and total loss limits as well.
Yeah, 100%. And also, my advice would be to open up a demo. Right. Once you've done all the hard work, open up a demo first, and if you can prove to yourself that you can make 5% following the prop firm rules, then that's enough time to sort of realize you'll be ready for a challenge. Aim for just 5%. You don't have to aim for 10% and replicate exactly with the parameters. But then you don't want to waste that time if you can do it. If you can do 5%, just half of what they are asking for, that's enough to show you, okay, I'm actually following the rules. You've got an understanding of the parameters and the circumstances, then you'll be ready, right? If you can't do 5% and you're in drawdown or you're high risk, why pay for a challenge, right?
Yeah.
Little things like that, to be fair. What else would you say?
So I think thinking at scale is really, really important. So making sure that you're trading in a way that you would trade when you have hundreds of thousands of dollars as well. So you might have a 10K challenge running at the moment, and you might be trading that at a much higher risk than you would do. So I was always taught from the very early days in my career to always think at scale. One of the questions I would always ask myself is, would I take this trade on $1 million account?
Yeah, that's a good laugh.
As in, would that be a valid trade that I take if I had $1 million? And if the answer to that is no, you wouldn't, as in that trade could lose you, say, $1,000, okay, on a 1% trade on $1 million account. That could lose you, sorry, would that be right? 1%? Yeah, it would be, yeah. That could lose you $1,000 on $1 million account. Then no, it's not. It's $10,000, isn't it? On
1% on $1 million, yeah, it's 10K.
I was getting really confused then. Yeah, if that trade would lose you $10,000, and you're looking at the trade thinking, I'm not risking $10,000 on this trade, then don't take it if that trade is only risking you $10. You've got to think at scale. And if you pass your prop firm challenge and you pass it using risk management or a risk profile that is not right for $1 million account, then you've got to change things when you get there, right? You've got to get to $1 million, and now you've got to change how you trade. So you get to that point, now you're changing how you trade, your results are going to be different. It might just be that you've been over risking and you've been able to take 3 or 4 losses in a row and then take one massive trade that's won you back. But those trades will all B grade trades, for example. And on your $1 million account, you might only be taking A grade trade.
Yep.
Now you're in a position where you're thinking, well, actually, I'm not sure whether or not my trading strategy is going to work. And then all those psychological battles come in again. So I think that's a really important skill to develop as well. It's just making sure that you're trading the account like you would do at scale. Think of it from a long-term basis. Think of it with more capital behind you and trade it accordingly. I think that's really, really important to develop.
100%. Couldn't agree more. Also, another interesting point, if you don't want to get banned from a prop firm, say you've broken a rule, right?
Yeah.
From owners, they are actually quite flexible. If you can prove that you can trade over a long period of time following risk management, showing that you're sustainable, right? Then they can bend way, right? If, however, you've done like one trade and you've made 9%, and the next trade you've made minus negative 15%, and then you start complaining, like you're wasting time, right? But if you've taken lots of trades, consistently over a long period of time, and something happens in the trade that you could dispute it, then they'll be flexible because they can see that, okay, this is a professional trader. And you know what, we can give you another chance, or we can at least maybe give you maybe they'll give you a free challenge. Maybe you broke the rules, or whatever it is. It could be so many factors, but if you can show that you can trade and follow risk management long term, that would help you not get banned from a prop firm, right?
Yeah, 100%. And I think we're talking about obviously the best ways to pass your prop firm challenges. Getting banned, I think you've got to be a bit of a dick to get banned, really, haven't you? You've got to be doing like big mistakes. I think there's kind of 2 topics here. It's how to make sure you don't lose your account. That's one. And how to make sure you don't get banned. Well, you're only going to get banned if you're doing stupid stuff that you shouldn't be doing, right? Like you're using a copy trader from another trader, because prop firms hate that. Or maybe you're deliberately invalidating rules. There's ways, isn't there? Like is it HFT, high frequency trading? Some prop firms, they won't allow that sort of trading. Just being not a decent person as well. I think remember, there's people on the other side of these customer services email, and I think when it's faceless, when you've just got a name that's coming through to you on an email, especially when sometimes the emails are outsourced to other countries, and you get like customer services team in like South Africa and India and Bangladesh, places like that, and I think a lot of the Western world treats people with disrespect when it's an outsourced company, especially, I'm just talking for English people, English people particularly struggle dealing with, foreign customer services agents. And I think there's a loss of respect sometimes there. And you've got to remember, this is a person at the end of the day. I've always gone on the basis, it doesn't matter, I've worked in customer service all my life, so I understand it fully, but I've always gone in on the basis of treat everyone with respect, treat everyone kindly, and ask them for help, and you're much more likely to get what you want. If you're rude, disrespectful, aggressive in any way, how is that person going to help you? There's a reason why that person's doing that job. 9 times out of 10, it's going to be a real live person at the other end. Yes, they might just be following rules, but they've probably got superiors that they can reach out to if they need to. So, treat the customer services staff with respect as well. Make sure that you're dealing with them in the right way, being respectful, talking politely. Because if you're asking for a favor, which a lot of the time you are when you've made a mistake in your trading, like, I don't know, you placed the lot size 10 times too large, you placed a 10 lot instead of a 1 lot, and it's blown your account. you made an honest mistake there. If you go and approach them and say, look, I've made a mistake, this is my first trade, I placed the lot size wrong, any chance, then you're much more likely to get a more positive response. So I think that's a really important skill to develop.
100%. And even if let's say you make a mistake or whatever it is that's happened, what the last thing you want to do, especially if you're part of the community, you're part of Discord, and if you start spamming support, right, and just complaining and just spamming it like 5-10 tweets a day, not tweets, 5-10 comments a day, and just tagging, support, tagging the CEO, you're gonna just, it's like, why? They could ban you.
You're gonna frustrate them, yeah.
Right? That's it. Even if you made a mistake, but if you're professional, if you're polite, like Chris said, and just give them time to resolve, because they're not ignoring you. They've got a list of support tickets. So give them time. What I would do if there's like an issue with my trading account, I'll ask a message, I'll tag the person, I'll give it a whole week, right? I'll give it a whole week, then I'll tag them, remind them, and that's it. You don't have to spam it like 10, 20 comments a day.
No, absolutely. Absolutely. And I think, one of the things that always helped me as well, making sure that I kept accounts, is there's an excitement, especially after you've passed your first, prop account, your very first one when you're now on live funds. I think it's really important to adjust your risk profile. So let's say you've passed it going on, 1% per trade, and that's how you've passed it. In the early days, I would always half that risk when I'm first live, so that you don't get overexcited and make any stupid mistakes. The most important thing once you've got that live account, whatever you do, is you preserve that capital, because you've worked for, if you trade at what I would class a normal rate, and I'm not talking about traders who can pass prop firm challenges in 2 days. That's high risk trading. That's not an area personally I would like to get involved with. So if you're passing in, I'd probably do say phase 1 should take you 2 weeks if you're a good trader. Phase 2 should take you a third week. So if you're passing in between 2 to 3 weeks, I say that's the right sort of pace. You're trading most days, taking trades, you're analyzing properly, not over risking, taking 2 to 3 weeks to pass. So, the one commodity that none of us have enough of is time, right? Okay, that's the one thing that is priceless. The one thing that we're all searching for more of is time. Every single trader is trading because they're looking for freedom. They're looking for their life back. They're looking to get out of their job, and that's all based upon time, making the most of your time. So you've got the finances and the ability to enjoy the life that you want to enjoy, and that's all based upon time. Everything comes down to time. People think trading is about money. It's not about money. It's about time. It's about getting your freedom back, and it's about time. Anyway, you spent 3 weeks passing that prop firm challenge. Don't go and blow it now because you've got excited and you over leveraged on a couple of trades because you want to get your payout. Taking 3 weeks to get there, probably taking multiple years to get where you are right now. It's going to take you twice as long to get the payout that you expect. Reduce your risk by half. That's totally okay. It's okay with that. You might be aiming for 10% per month, but by halving your risk, you only get 5% per month. I'd much rather get 5% per month than get excited and blow my account and then have to start that 3 weeks again. One of the most important things that you can do is make sure that you never go above 1%. Is probably the maximum you should ever be leveraging per trade. And then that you'd have to be ultra confident in your strategy then as well, I think.
100%.
You need to really know what you're doing. You need to have all your data aligned. Like Diego and I, for example, we don't trade at 1% per trade on our prop challenges. And we would class ourselves as very experienced traders. And, I've never needed to go more than that, if I'm honest. I've never needed to go to 1% per trade because I can hit the numbers that I need to hit without having to go any higher. So why risk any more, right?
Yeah, exactly that. Also, another element when you might get banned from a prop firm could be, those services where they can pass your prop firm in a day or something.
Yeah.
You pay for a service, they pass it through the user bot, and then you start trading your own way. You'll get banned because they're gonna find out eventually, right? It takes a while for them to do their due diligence, right? But think about it. if you're using an algo, you pay for an algo, does like 0.01 lot, and you pause the challenge, then you start swing trading.
Yeah.
You get banned, right? So you need to be smart about it. If you are gonna do it, just don't go the easy way. Don't cheat.
And a lot of them now as well, they have a lot of them now have those kind of consistency scores in as well, don't they? They don't allow you to, they want to see that you're a consistent trader. So if you're using like HFT or a prop firm passing service, for example, to pass your account, it may actually cause you problems depending on the prop firm that you're using. It may actually then cause you problems getting payouts in the future, because if you're then trading that account, it will change the way the account's being handled. And I think they look at things like consistency scores, they look at like average lot size. If you've used a prop firm passing service that's been like lumping on 2, 3, 4 lots per trade, and taking out 0.2s, 0.3s, all of a sudden you go in and start trading 0.5s and holding them for 3, 4, 5R, that could affect your ability to actually get payouts from them as well.
100%. Anything else that you might think might ban the trader from a prop firm? Chris?
Yeah, I think we kind of covered it. I mean, just general trying to cheat in any way. I don't know. There's various ways. I've never really looked into it because I wouldn't want those sort of things in my head. But I think there's people will open like max positions. But I remember hearing this thing a little time ago where you can almost play the spreads. I think where you can take positions in both directions and end up guaranteeing a win. I can't remember how it works. I think there's some sort of software or calculator that does it, and you can effectively cheat the system where you're taking a position and then you're making money because of the spreads or something like that. I don't know how it works. Anyway, if you're trying to find a way to cheat the system, if you're trying to find a way to cheat the prop firm rules, you're going to get caught out sooner or later. At some point in time, you're going to get caught. There'll be a review of it's probably not sustainable, firstly. It's like the old saying goes, if you give a man a fish, he eats for a day. If you teach a man to fish, he'll eat for his life. And you need to learn how to trade. Don't try no one ever got anywhere cheating. No one ever got anywhere in their life cheating. You don't gain anything from it. You might get a step up, but you don't actually have
exactly.
the knowledge and the understanding that you need at that step up. So it's kind of pointless anyway. You're going to blow the account. If you cheat into pass, you're going to blow the account. And if you don't blow the account, someone's going to catch you. These prop firms, they're not stupid. They're aware of all the tricks that people will play to get you through your prop firm challenge. So if you're not doing it in the right way, just be really, really cautious with that, I would say as well. Really, really cautious.
100%. And also, there's a bit of a lazy mindset. If you want to cheat and cut corners, if you have a lazy mindset, that's going to reflect in your trading.
Yeah,
you probably won't be able to do it yourself anyway. But if you want to do it the hard way, the real way. I've got so many hiccups today. If you want to do it the hard way and not be lazy, then you'll be there in the long term. If you want to cheat, you're lazy. That means you're lazy in journaling, you're lazy in life, and you don't deserve to be a trader. You're going to struggle when you're going to be paying for all these, whatever you're paying, these fraudulent activities, right? Mm-hmm. But you're not really going to take a payout. The universe doesn't really work like that. If you're lazy, and you want to cheat, you might get little snippets here and there, but it's always going to hit you in the foot. Yeah, not worth it. We do have some activity in the chat. Let's invite somebody, see if they want to join the chat. Who would like to join us for a little chat? And your face, you have to agree that your face will be here. You have to put your camera on. Don't be shy.
Anyone jumps in.
If anyone's interested, we'll send in the link and then, we'll add you to the chat. In the meantime, you can answer some questions. I think there is a question here by Joseph. What would you say to this, Chris? Shed some light on trading timeframes. There is a debate about short-term trades versus swing trades. What would you recommend to beginners? We've covered this before, but
Yeah, that's a tough one. So I think your schedule, your appetite, and various other factors are going to play a really important factor for this. So your ability to trade is really, really important. So, how often you can be at the charts. I think a personal preference is really important as well. For me personally, I like to be a day trader. I like to take short-term trades. I like to be in and out of the marketplace as quickly as I can. I like to get into the marketplace, get my profits, and then ultimately run. That's what I'm looking for. This trade is a good example. Just an update on Euro USD whilst we're here, by the way. So we've got the New York liquidity that's come in now. It's created what I class as the New York Open trap. This move happens almost every single day. If you go back and look at your charts, it happens almost every single day. It leaves behind an area of imbalance, and this normally tricks people into going bearish in this example, or bullish, obviously the other way around. What's more than likely to happen in this scenario is that trap is going to get invalidated. That would then be a really good place to take profits from, or at least partials out of this trade. So we'll hopefully get a movement on that before the end of the session. I think, if you are a swing trader, the markets aren't the best for swing trading, especially in recent years. The opportunities are a lot worse for swing trading now, because if you look back at kind of weekly, you look at that, like this congestion here, for example, really difficult to get into a swing trade here. You had this really nice position back in 2021, and then since 2021, the Euro USD chart as an example has been quite congested within there. So, and what we're looking for, not congested. I always forget this word. Begins with C. Consolidated. It's been consolidated within this area for quite a long time now. So you've got to be careful of that with swing trading. So it depends on what you mean by swing trading. Like if you're trading the hourly time frames, so you're looking at maybe daily bias, you're then looking at ranges on the 4 hour, and then you're looking for entries on the 1 hour, then that could be maybe a good way of swing trading at the moment. But it really depends on what your appetite is and how you want to trade. I think the debate comes from people on both sides of the coin, really. So I think you've got to work out what you're able to do. Firstly, that's the first thing, and then from there, you've got to then build a trading plan around that, and that's the only real way that you can do it, I think. But it's personal preference. Do you want to be holding trades for days, weeks, maybe months, or do you want to be holding trades for minutes and hours? I know certainly what I would. The frustrating thing I find with swing trading strategies, or a lot of people find with swing trading strategies, is you might wait a week for a setup that doesn't then appear. Like that, it often happens. Like this is a good example. Okay, I missed my entry down here. That was my entry. As you can see, tagged it. I didn't actually get tagged into the position. Frustrating. Imagine that happened on a weekly basis. Imagine you've been waiting, and these were weekly candles. Imagine you've been waiting for 3 weeks for that trade to play out, and then you missed it. And that trade is taken a month to play out. That, for me, would be the reason why I wouldn't like to swing trade.
Yeah, let me add up on that. What I would suggest would be to, let's say, for example, your schedule says that you cannot look at the charts all day. So you have to be a swing trader. That's fine. I would advise to become a scalper, right? But hear me out. I've got a reason for this. If you were to scalp on the 1 minute time frame, you're gonna learn the same fractions of a swing trading setup within, like Chris, for example. You must have learned a lesson from this within the last 30 minutes. You learned a lesson. That's it. Journal, you learn. A swing trader might take 3 weeks to learn a lesson. So if you've got the repetition and you're learning a lesson 10 times a day, and you're scalping 10 times a day and trading on the 1 minute, I'm actually advising to scalp, right? Just so you can get as much data. Once you've got the data and the strategy is bulletproof, then apply it to swing trader so it can fit your schedule. That's what I would advise. I would advise to scalp, get the data, and then apply it to either swing trading if you're, if you have to swing because of your schedule, or maybe you can do day trading. But I would recommend scalping because you get a lot of information. Remember, the markets are fractions, so that setup that Chris took, that is going to happen exactly the same on a monthly or a weekly chart. The only difference is he will learn a lesson a lot faster, and he will improve a lot faster than somebody that's just swing trading. So that's what I would advise. Joe said.
Good advice. Yeah, Lawrence makes a valid point. Swing trading, you would need to trade more pairs. Yes, you probably would be looking at multiple pairs and therefore have better entries. That's absolutely fair enough. That in itself, though, does bring in its own problems. You have now a lot more to manage, to look at, to consider. You are going to have areas where you don't know which trade to take and things like that. I don't know. I personally think to learn how to trade, Diego makes a really valid point. You're going to learn a lot quicker trading on the lower time frames. Yes, the moves aren't as reliable, but everything's fractal at the end of the day. What happens on the lower time frame is exactly the same as what happens on the higher time frame. It just happens quicker, which means there's more likely to be invalid trades and things like that. So I personally would say the best way to learn trading is to learn time frames, higher time frame analysis, but with lower time frame entries. And then from there, I would be looking at just one pair and just understanding that one pair, learning how that one pair moves, learning how that one pair, its tendencies, and then kind of going from there. I've got a few questions in the group, so let's go through them. So, in duo, I'm definitely in the trade, not pro that I'm somewhere in the middle. No, it's always a challenge when I have open winning positions. I always want to add to my winning positions and trade my stock up, but this always results in losers. And they say elite traders add to winners, which is why I started doing it. Do you recommend adding positions or letting them be? I personally think you've answered your own question here. They say elite traders add to winners. Well, elite traders know their trading strategies and their pairs really, really well. And what I think you'll probably find is that most elite traders will be adding into positions when they see new positions occur. For example, this for me now is a new position. So I would be comfortable taking another trade like this, okay, and adding into the position to ride that up to the top. That for me, I'd be comfortable taking. That would be my first position, which we missed. This would now be my second position with my stop below this new low. Probably want a slightly wider stop to be fair because we haven't actually created a new high. So that would be my new position to run up to the top. That's where what you class as elite traders will add into their positions. You may get some traders that will add in higher up, but you're absolutely right. What often happens is people add in higher up like that, okay, expecting to get, just price to keep running up like that, but it doesn't often happen. The problem when you add into positions is you have to have really wide stops. The only safe stop, you can never call it a safe stop, is where your original stop was. So you just need to acknowledge the fact that you're taking a 0.4R trade. If you're comfortable doing that, then knock yourselves out, right? You're obviously welcome to do that. But, that may not be, but that's certainly not the risk profile for me personally anyway.
Yeah, exactly. And also just to add on that, Chris, adding positions on a winning trades is actually a completely new strategy when you think about it. Because if you've entered where Chris entered, his stop is in a technical area. Now, if you enter higher up and you put your stop back where Chris originally put it, it's not worth it, number one, so you're wasting time. But if you have a way to improve your strategy when it's trending up and you want to add to a winner, your stop has to be in a technical area where you're still not sacrificing the risk reward. Yeah. Right. So you need to put the work in and get the data for you to be able to basically add to winners. Right. And then, so that's it really.
Yeah, and remember as well, every time you add a position, you're halving you're doubling your risk and you're potentially increasing your losses. So you've got to acknowledge the fact that your 1 to 2 trade that was here now becomes potentially a 2 to 4 trade. So you might get 4R out, but you're now trading an extra risk, which means if it loses, you lose twice. So you've got to factor that in. And if you're not 100% confident with your strategy, which you do because you're newer, sounds like you probably aren't yet, and that's no slight on you, that's just because you're newer, so you won't have that experience and that data yet. If you're in that position where you're still new and you're still learning, and you haven't got the data to understand, when your trading strategies work, when it's best to trade, what your loss streaks are like, what your average wins like, what your trade potential like, and all this information that experienced traders have in their head and in their trading plans and everywhere else. If you haven't got that information yet, what you're doing is you're acting on greed and FOMO rather than acting on logic and science. And what I mean by science is the data gives you information that you need to tell you whether or not you should be doing this. it sounds like you're adding positions and hoping for the best. That's not you acting on science. That's you acting on emotion. And that's a really dangerous habit to learn. And if you do learn that habit, because what will happen is every now and again, it will pay off in your favor. So you'll lose more often than not doing what you're doing, and you'll win every now and again. And that one win out of, say, 5 different losses that you've had, where you've lost twice the amount you should have, that one win out of those 5 losses validates what you've done, because you get that rush, you get that excitement, you get that dopamine release. So it validates what you've done. And then you get stuck in a position where you think, well, that worked that one time, and you kind of forget the losses. Best thing I can advise you if you're newer is every time you trade, take one position only. If it hits target, great. Go to your journal, write about it. If it hits your stop loss, doesn't matter. That's also great. It's data. You learn more of your losses than you do your wins anyway. Go to your journal and write about it. The only way you can understand how profitable your system is by taking one position per trade, analyzing the setup, putting it all in your journal, and going from there. And if you are taking multiple positions, it's really difficult to understand how profitable you actually are, because if you're adding into winners and you are not adding into losers, you're doubling or tripling your risk on winning trades, and you're keeping your risk the same on losing trades, which then does make it really difficult to understand what is working and what isn't working.
Yeah, 100%. And also, it might get messy if you're adding positions, right? And you're just adding positions on the way up. For your psychology, it's going to be messy. What I would recommend, just another alternative, if we really want to capitalize on the move, is if you've entered a trade, let's say you've got your target at whatever arm. If your first position, if you can at least lock in, let's say you're up 2R on the first position and you've risked 1%. If you want to add to a winner, then at least cover your stops on the 2R. Then on your new trade, you can do 2 things. You can either risk your current profit and risk 2% on that trade. So even if it takes you out, you're on break even and you're out. Or risk 1%. And if that takes you out, takes your stop loss out, you'll still be up 1% because you've locked in. So you need to obviously use a bit of common sense and don't just add positions. And if you take a loss, then at least, you take a 1 loss and another 1 loss, and another 1 loss. It gets messy for your psychology. So kind of play the number games as well.
Yeah, Lawrence, agree. 3 to 5% trades don't come that often. And a swing trader risk like 3 to 5%. Yeah, I mean, well, look, if he's risking 3 to 5%, he's not actually doing that well, is he? He's just getting one hour trades out. So he said he's swing trader and he risks like 3 to 5%. 3 to 5 per trade because trades don't come. Oh, sorry, I see what you mean, because trades don't come that often. Yeah, I mean, yeah, you can do that, but look, he's got a strategy that works around him. He's happy to hold his trades for days, weeks, months, and that works for him. Some traders have that appetite. I think most people, especially new traders, prop firm traders, they've got a slightly bigger appetite. They want to be passing their prop firm challenges in a few weeks and getting funded and getting payouts, and that may not be the way that I think most traders here will be looking for. But swing trading can work, absolutely. Swings EU, Euro trader swings EU. I wouldn't say Euro trader swings EU. He's a bit more of a day trader.
No, I think he's a swing trader.
Is he?
Yeah. I know him very well. He does H4 swings.
Does he?
Yeah, he's a swing trader.
I've been watching his stuff lately, and he was doing more like intraday stuff. I'm not wrong. But he doesn't go for particularly big targets, does he? He'll come out in the marketplace like.
No, I think he designs for that 2R, 1.5 arm, 3, 4 arm. He doesn't aim for the style. He's just consistent, right? Yeah. Definitely check out the Euro Trader if you want to look into swings. Yeah. Or even join his community. I'll recommend him as well. He's definitely pretty cool.
Euro USD. I mean, it is Monday after all, so it's not really playing ball at the moment. We had that nice push, as you can see here. I have got this trap marked out, so we'll see how it plays out for the rest of the day. If we come down and we reach this kind of 9.2 level, which was my original entry, then it'd be a no trade for me anyway, really. So we'll just kind of see what's happening. We've got this kind of we've started to create a pullback, but look, it's Monday after all. We knew this was a bit of a rush trade. It wasn't really a trade that I forecasted, if I'm perfectly honest. I wanted to find something, and if we'd been pretty quick, we could have come out at like 1.7, something like that. But we didn't do that. That didn't happen, and we have now pulled back. And this is quite common for Mondays as well. So don't expect to get these fantastic trades on Mondays. I think there was a couple of comments in the chat. I don't know whether you want to do some analysis. We've got time. Yeah, we've got time. So Euro, we've got two choices: Euro CAD or USD CHF. You can choose.
Euro CAD or what's the other one? Dollar Swiss.
Yeah, dollar Swiss. The charts are on. Euro CAD or dollar Swiss. Which do you want?
I'm gonna do. Hold on, let me just send. Probably let's go on Euro CAD. Dollar Swiss.
Euro CAD. That's from Nata John. Cheers, Nata John.
Yeah. Hold on. Okay. That's it. All my charts are on. Fair enough. Which one am I doing? Euro CAD. What time frame? Are you a day trader, swing trader, scalper? Nata John. Because there's no point me giving you like a higher time frame analysis and you're like a 30-second scalper. So I need to know what time frame you trade, please. I'll just wait for Nata John to confirm.
Why don't you start on slightly higher time frame whilst we're waiting? I'll let you know if he jumps in.
I was just doing that, yeah. Makes sense.
Why don't you give your kind of top-down analysis?
Yeah.
1 hour time frame, you said.
Fair enough. Okay, fair enough. So the liquidity's been taken out. So immediately I'm bearish, but it might be a little pullback coming up. Let me see if we have. I believe we do have an Elliott wave forming here. Hold on. So yeah, 1, 2, 3, 4, 5. Change this to Y, and hold on. No, I don't think this is gonna. Hold on. Oh wow, yeah, that's a completely valid. Yeah, so overall, definitely bearish.
Yeah, it looks that way, right?
Yeah, bearish.
But is that a daily?
This is a week. Yeah, sorry, the daily. Yeah, this
daily. Yeah.
This is daily. Yeah, this is great. Okay, so bearish, fine. Now that I've got my Elliott waves, it's in an interesting area. Let's go on the H1.
So you have a nice little boomerang position at the top there, wouldn't you?
Yeah. Or a confirmation if you've missed it. In terms of an entry here, because we're bearish, I'll at least try and target the trend line, right? But do we have a valid trade? So this consolidation is not worth trading. You get your range, and I will be more interested in a rally up here and then a drop towards this liquidity or this trend line. That's what I'll be looking at the moment. Let me see if there's anything else. That's it really. I'll keep it quite simple. Do I see anything else? Hold on. Nah, this is it. That's it. This is just a waiting game. I'll wait for a short from around this area, basically.
Yeah.
Or at least clear momentum.
Yeah.
And then get another.
Yeah, I'll be exactly the same as you. That would be my hourly range that I'd be looking at right now. I would be waiting for a sweep of that. So that top line for me would be my external liquidity. I'll be waiting for a sweep of that external liquidity or a new bearish range to be created. And same as you, I'll be waiting for then a pullback and to get in like that. If you do get some lower time frame confirmation and let's say it just drops from where it is, you might get some lower time frame ranges that you could get into to go short from. But you run the risk of it, hitting that lower level, that lower flat line that Diego's drawn there and rebouncing off that. You also run the risk of it hitting the trend line and bouncing off that, which is why a sell will definitely be much better from that external liquidity at the top there.
That's it, exactly. So yeah, this is it's tradable. You can trade it, but yeah, I would advise to enter high, not in a range. If you are going to enter in a range, this is where you probably need to be a bit of a demon, go on the lower time frame, M5, and I'm pretty sure, I'll be able to find an entry, perhaps somewhere here on like the M1 confirmation, new boomerang, and then get long. Fine, you can do that. But if you're a H1 trader, then yeah, just enter above this H1 high. Keep it simple.
Like the old saying goes, isn't it? You don't want to be selling low and buying high, right? You want to be selling high and buying low. That's what you want to be doing. So,
and also just determine the bias, right? So the bias based on my strategy is prices are magnetically away forward. So currently there's a nice drop to fill to around this area, maybe lower. So I'll be selling here towards the trend line, depending on the momentum. Then you can hold it towards areas of liquidity and whatnot. So yeah, that's it. That's it for me. Keep it simple.
Nice.
Analysis. What was it? Analysis on Bitcoin. Analysis on Bitcoin for investment purposes. Okay. Brief. Let me see. Yeah, it's a bit of a tricky one. Not financial advice, but if you are investing in Bitcoin, yeah, I would probably look for a potential buy here. And investing in crypto is a completely different ballgame to FX. This is the thing. So
agreed.
I would probably wait for around 49, 46k if you are going to get involved in a long.
Obviously not financial advice though.
What's that?
Obviously not financial advice though.
Yeah, not financial. Yeah, exactly. Yeah. Exactly.
Enter at your own risk, do your own research, etc. All that nonsense. We're not here to give you advice on the trades that you should take. That's just Diego's opinion.
That's it, really. Yeah, and yeah, you can enter now and hold the long term, but just anticipate that there could be a pullback for a few weeks, 3 months.
Yeah.
Either way, Bitcoin will most likely just continue making new highs over the years. But you always want to enter at a low point, most likely below this liquidity or that liquidity. Just aim for the liquidity levels if you want to get in Bitcoin. That's my advice. Not in the middle of this sort of range over here. You see this range here? This is where the retail traders will get in. There's a range here. You don't want to get in here. This is where you should not be in this trade, right? If you look at this particular area, prior to that, there was a range here, right? A few ranges actually. Look, there was this range here. You don't want to enter above it or in the middle. You want to enter below it.
Yeah.
There's your entry right below. That's it. Now there's a new range, right? So you want to enter below it, not inside of it. Just follow the plan.
Yeah.
That's it. Always enter below liquidity. So ignore the noise ignore the news, ignore crypto gurus, ignore me, ignore Twitter, X, just enter below liquidity. Price always takes that liquidity. That's my advice.
Yeah. Especially with Bitcoin as well, it's so manipulated. I stopped trading Bitcoin, so I used to day trade Bitcoin.
Yeah,
trading it because I couldn't keep up with the manipulations. You got to be really careful on Bitcoin because Bitcoin is a digital currency. It's not centrally regulated, and as a result of that, there are big players more at work on cryptocurrencies than there are on things like currencies and commodities that are more regulated. Long story short. The mass of where Bitcoin is held, as in what moves the market, it isn't like things that we're used to where there's algorithms that control the market. The big players that have Bitcoin are the ones that control the market ultimately. So you have to be really, really conscious of the fact that manipulations are rife on Bitcoin more than probably any other currency or pair or commodity that you will trade. The manipulations are wild. Sometimes it will take out in seconds 3, 4, 5 daily levels. That little spike there in itself, that's taken out what, 3-4 weeks worth of data?
Yeah, all the time. Look at that. That was so obvious. That drop was so obvious.
Yeah, that's not a normal manipulation. You don't get that on the regular forex pairs, not to that extreme. So just be conscious of that. If you're trading it, trading it maybe on a long-term basis with nice wide stops. Even then, in that example, you might have got yourself stopped out. But if your stop had been below that low where Diego is now, to the left, you might have been okay on that one. But you've got to be really cautious on Bitcoin and just understand that you are trading against a very heavily manipulated marketplace. So just be a bit smarter than you would be normally, I'd suggest.
Exactly. And if you just have these levels that's mapped up, these are your areas that you should be buying it. It's that simple. Just buy it in those areas, right? But obviously, you have to still be aware of, are we in a bear market or a bull market?
Yeah, exactly.
That's it. Not much advice I can give them.
Yeah, nice. All right, I think we're out of time, aren't we?
Yeah, that's it. Yeah,
good session today. That's gone quickly today, quicker than normal as well.
Yeah, it's a shame that nobody joined the podcast.
We'll get someone eventually. But what is great, guys, is you've been really chatty in the comments as well. So thank you for that. Really, really appreciate it, for your questions as well, because it gives us kind of areas that we can dip into and discuss, which obviously gives you guys who are watching at home a lot more to kind of take from these sessions as well. So thank you very much for all of you that contributed. Get ready, have your questions primed for next week. Again, we're going to try and find some live trades. Diego and I will going to try and find some trades before these sessions. Euro USD, just so you know, we are potentially rejecting down now. I did just get tagged in, by the way, so I am now in that position. Whether that's wise or not, I don't know, but we'll see. We'll hold out and we'll go from there. So hopefully, we've just got that tag, as you can see. Hopefully, that now takes that trap out, takes out that high, and we go from there. We are overall bullish in this market as it currently stands. We've had this bearish push down, hasn't really done much. But, you know, we are on a Monday. We're stuck in the middle of a range. So who knows? It does look like structure that's going to change. I try not to expect the marketplace, but it does look like it's going to do something like that. But yeah, watch along at home on Euro USD and see how it plays out. Wish me luck, because we are now fully locked and loaded into that position.
Lovely. Good luck on that one. Keep us posted for next week.
Yeah, we'll do. All right, guys. Well, thank you again. Cheers, Diego. Good to see you, dude.
Nice one, you too, man.
See you next week from sunny old England.
Good luck. Enjoy the rest of your holiday, man.
Cheers, man. Speak soon.
Bye-bye.
Bye.